This is Joy Hughes with the Solar Gardens Institute. This is Solar Gardens Finance Part 2. Here you see the relationship between our special purpose entity, solar panel hosting company, and the solar installer. Now you see here we have EPC, which stands for Engineering, Procurement, and Construction, Integrator, and Installer. Those are different parts of the supply chain, working our way from the putting the project together to the actual construction. So O&M stands for Operations and Maintenance. The special purpose entity maintains that contract over time, often with the same company that installed the solar array. There's a hosting services contract and a cash flow associated with that comes from the special purpose entity to the solar panel hosting company for performing all the different management services that are needed. Now, solar panel hosting is able to aggregate between a number of these special purpose entities and get an economy of scale on these services. There's a contract by which solar panel hosting contracts with the installer integrator to actually develop and put together the project. So that's why there's a line extending there. Here you see the relationship between the special purpose entity, solar panel hosting company, and the subscriber organization. Well, the subscriber organization is where the solar gardener actually resides in this model. A subscriber organization makes the decisions that the community should be making relative to the special purpose entity. Now, of course, there's going to be some long-term contracts there, and they can't go and be decreasing the cash flow. So there's some limitations on what they can do once they've signed the contract, but they can make any relevant decisions regarding the array. The special purpose entity is providing, once again, a hosting services contract, the solar panel hosting. And here's a very interesting part of the model is the grant, Solar Gardener grant, which can happen prior to the actual development of the array. That seeds the subscriber organization and gets it going. Now, this is something that we're trying to get in place here in different states. We've had some help here in Colorado through the Governor's Energy Office and through various programs. So here's where the rubber meets the road. When we say make it a community decision, we really mean it. The subscribers themselves exercise democratic control over the subscriber organization, which means that they get a say in how their actual solar garden is governed. They have a stake in the special purpose entity. They purchase power or purchase panels. They actually have a sense of ownership of their own equipment. The subscriber organization then exercises governance over the special purpose entity. Again, there's a long-term contract in place that keeps the special purpose entity operating over time. That's a pretty rigid thing, so you are limited in certain ways as to what you can actually go ahead and vote for and while you're operating this. So there are questions regarding what structure you want to use, whether that's a cooperative or an LLC or a nonprofit. Any of those will really work, and it's a great thing that each community will have its own decision about how that will work. In a flip model, a third party that finances the solar garden actually turns the ownership over to the community after a few years. Now this happens, the third party claims the 30% federal tax rebate, the accelerated depreciation, and other things that a non-taxable entity such as a church or a nonprofit or a municipality might not be able to monetize. Now there's about a 5-year period under which the IRS can recover the investment tax credit if the ownership is transferred to a non-taxable entity. So the transfer has to happen more than 6 years after this period happens. Then after that point, the local subscriber organization that you've got, whether that's a cooperative or a nonprofit or an LLC, actually assumes the ownership of the array. The subscribers don't really see anything different. Their bill is exactly the same as it was before, but the actual ownership has been transferred to the community, and that allows for a lot of flexibility as far as giving actual ownership to the subscribers and allowing people who start with a power purchase agreement to eventually own their panels. Here we talk about the concept of crowdfunding, which is a way to raise small amounts of money from large amounts of people. This can be a minimum contribution of $10, $100, $1,000, depending on the structure of the array. So in this process, we must comply with a federal and state securities law and make sure our project qualifies for whatever tax benefits are available. So these are the constraints around a crowdfunding model. Now there are a variety of ways to do that, one of which is a donation. Like a Kickstarter allows people to aggregate their donations, and then if enough people make donations, they get the money. The rate of return is minus 100% because you don't get that back. Other places, you can get a 0% loan paid back in a number of years. That gets your money back, but that doesn't get you a tax donation benefit or anything like that. They can make a direct offering or Regulation D offering. These are different exemptions under federal securities law that allow you to skip registration. A cooperative in many Colorado and many other states is actually immune from securities law as well. And other places, Solar CD, by using a credit union, which is really another kind of cooperative, that can give you a decent rate of return by using an established banking institution, a credit union, to actually manage the transaction of gathering the money from subscribers in their accounts and then transferring the credits. So here's an example of cooperatives. You have the democratic control baked into the cooperative model, one member, one vote. That's always the case. And then the profits get redistributed to all the members. This is happening in Ontario, Washington, Colorado, actually also Massachusetts and a couple of other states. The small investors come together to provide the capital for the community solar arrays, and they can actually invest in the subscription of somebody who can't afford to pay up front. So that allows people who are a little bit better off to invest, and people who are struggling to actually be able to gain ownership. And that's going to spread the solar benefits and make them a lot more inclusive. Thank you for being a part of the Solar Gardener training. This is Joy Hughes signing off. I hope that everybody has had a chance to learn a lot here. I sure have in the time that I've been doing this. I want to encourage all of you to become solar gardeners and to organize your communities. So this is the end of the training. My name's Joy Hughes, signing off. You can reach me, joy@solargardens.org. Please don't hesitate to contact me. You can sign up for the mailing list at solargardens.org. Another thing you can do at solargardens.org is donate. We usually ask for the live course, about a $20 donation. Definitely sign up for the course. training@solargardens.org is the email address. You'll be asked to fill out a form, and then you can be part of our webinar series and help to organize your area for solar gardens and community-supported energy.